2017 for the leveraged debt market was ended probably with some relief and some surprise based on the way the year started. At the start of the year, there was political concerns, there was economic concerns, there was all the regulation that was going to be put in place during the year. As people got more and more comfortable, it seems like the market started to take off, particularly on both the debt and the loan and the high yield space across Europe. In lots of ways. The Term Loan B had a very strong start and displaced some of the things where in Europe you might have seen there been a traditional high yield issuance, and they actually refinanced certain high yield bonds. I think towards the end of the year we saw a bit of a rebalancing where the high yield bonds got back into position, and I thought probably towards the end of the year things had evened off. And I think in 2018 we're expecting a robust market for both bonds and for loans in the Term Loan B structure.
Growth in the European loan market last year was over 100 billion. We're talking a growth of over 100 billion. Very solid reasons for it. Improved economic conditions in Europe. Europe's actually got growth now better than it's had for the last 10 years or so. The States continuing to grow and expand in the Far East. That coupled with unsatisfied demand, investors are looking to invest money in loans in Europe.
We're very optimistic about 2018. I think the year has started off great. January of 2018, all indications are that this is going to be a very strong year for the leveraged finance markets across the board. Things like the political environment and the regulatory environment, even though they may not have changed much, at least they are more settled. So I think the volatility that might have been associated with those things seems to have subsided.
Take improved economic conditions, relatively benign interest rate environment, low default rates, and extraordinary investor demand. I can really only see one movement in leveraged loan volumes and high yield in 2018, and that's upward.